Last week was different. In market parlance, government beat street estimates. Petrol price was raised by an aggressive ₹7.55 per litre. Commerce Minister Anand Sharma quite uncharacteristically sided with the telcos against the recent TRAI recommendation for 2G spectrum pricing. Then Jairam Ramesh demanded abolition of subsidy in diesel, kerosene and LPG. Elsewhere, Digvijay Singh, Congress General Secretary, talked about desirability of older politicians taking retirement so as to enable the next-gen leaders to take charge. Kaushik Basu, Chief Economic Advisor, repeated his earlier lament about lack of government decision-making owing to a reluctant bureaucracy and coalition politics. Not to be left out, Mr. Rangarajan, advisor to PM, hinted at further action on petroleum product pricing. Is there a connection after all? At Percentage Play, we piece together these seemingly unconnected yet significant developments. Could it be that the government is finally waking up to the fact that the subsidies haven't helped UPA win elections? Rather, it has made life difficult by unwittingly sponsoring high food inflation. And hence the many voices from within to prepare the ground for decisive action. Look at the petrol price hike and the underlying math. Since the last time petrol price was fixed on 1st December 2011, Brent prices have fallen by about 3% from $109 to $106, while dollar rupee has depreciated by 9% from 51 to 56. That prima facie indicates that the hike of $7.50 or 12% is aggressive and probably indicates a newfound resolve to bite the bullet. Could it also be that a diesel price hike is on the cards? Most likely yes. With Mr. Sangma's candidature not finding enough momentum, Congress may have been emboldened to delink harsh economic imperatives from presidential election calculus. The dismal state of the economy may also be forcing a silent consensus on unpopular action cutting across party lines. Haven't Didi and Jayalalitha raised power tariffs in their states? Meanwhile, European crisis remains unresolved, with Germany seemingly getting isolated. Ominously, 10-year bond pricing for Spain moved up to a frightening 6.24, while euro-dollar dropped under 1.25 intraday, a level not seen since July 2010. Both point to extreme stress, which is unlikely to go away until the fate of Grexit is known around end June. Market shocks are still possible, but hopefully better sense will prevail. Equities may be sensing the changing winds. Last week, Nifty did register a new low, but with positive divergence in momentum indicators. Indeed, the behavior of most large caps is indicative of a near-term bottom. Institutional investors, both FIIs and DIIs, have been fence-sitters this past week. Call it confusion, indecision, or lack of conviction, they seem to be just biding time. For FIIs as a community, selling when rupee is 56 to $1 after having invested heavily this last quarter when rupee averaged 51 can be hard to defend. The market can still drift lower though. In fact, if there is no follow-up action to the ministerial sound bites this week, market can as easily fall under its own weight. But on the other hand, we may also be in for a relief rally. With investor expectation at an all-time low, every positive governmental action can boost market sentiment. On our part, to play safe, we have chosen to wait for confirmatory signals before getting fully invested. Meanwhile, we are happy trading pairs in our quant pair fund. We did book a profit in a few pairs last week, taking our outperformance up to 37%, QPF up 22%, Nifty down 15%. We are now close to entry levels of several others for the next week. It has been difficult to insulate Comparative Value Fund, a long-only equities fund, from the market downtrend. But we are happy to be still standing with an annualized 5% positive return amidst ruins that include the largest mutual fund returning a negative minus 9.5%, while Nifty slid by 10%. If follow-up buying materializes next week and global equities do not stutter again, we might enter a few more swings in high-quality counters next week in order to ride the relief rally. Thank you.